Hello, everyone. Actually, got the fancy computer, actually the fancy camera on. So, hi, everybody. Mwah, 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 all my fans. Mwah. Everybody hates me too. Mwah, you get even more kisses. Wow, there's a crazy start to the show. Hey, welcome back. What the hell is this? This is the broiler chickens, eh? Brian's back in the saddle. Back in Vancouver. It's about 20 to 11 here on Sunday morning. Where are we? It's the 25th of September. I think we were planning on starting this school term. You know, the whole September term start kind of got muddled up with our Portugal trip there, but nonetheless, back in Vancouver now. And I think if I'm not mistaken, the marketing department still has this registration open for one more day. So by all means, if you are interested, not a bad idea to get yourself educated. And if anything, at these kind of prices, we haven't been hyperinflating our prices the way that the rest of society has. So maybe take advantage of the low prices while they still are around. But welcome back. This is our broiler chicken show. I kind of started off really not really knowing what the heck I'm going to talk to you guys about here today. I did yesterday. It was kind of fun. Wanted to get this Rumble up and running, and I felt like doing my weekly commodity trend survey. Actually, that's what, let's see if I still have that. On my old 1980s website. In fact, actually, let's see if I still have that. My old 1980s website. What did I do with it? There it is. There it is. I used to do this weekly commodity trend survey about once a week or so. Trading forum. You gotta love those colors, eh? And every week, I mean, this was back from, I guess, 10 years ago. I would just basically identify what the trend is, when it started, how many weeks old it was, what the last sort of market structure position was, the price, the stop on that market structure, the target based on things like A, B, C, Ds and 50% rules. So in essence, this is like the bot and the El Tangonator. I wouldn't mind getting this up and running. We've kind of done a little bastardized version of it. It's not really very good, but it's coming along, work in progress. Covering a whole bunch of markets, about 100 different markets here. And what I thought I'd do, and I'm not quite sure how we'll do this, but maybe somewhere on the website, once a week I'll go through and basically just do a walkthrough of every single market. So this is what I did yesterday for fun. A few people watched it. I don't know how many people. But anyway, I want to try and get this Rumble up and running so that we do have an alternative to YouTube. But you can see I just slicked back my hair and I just said, what the hell, let's go for it. Because you guys love to have these guys talking on camera. I even had that image. So I'm not even quite sure how to do this, to be honest with you. But what I will do, I think actually I did tweet it out if I'm not mistaken. Yeah. So by all means, if you feel like it, this is a good 2.5 hours, if I'm not mistaken. There it is. Just to do the whole damn thing all over again. And this basically, I did a walkthrough of the commodity markets from, let's see. I looked at all the currencies on a weekly basis. I include Bitcoin and Ethereum in the chart. And you can see big fat M staring you in the face in Ethereum. Financials, did a good old long talk about the bond market there yesterday. Bond market looks very, very disturbed. So not a big surprise. We all know about interest rates. I did a nice walkthrough on the equity markets, and I thought it was interesting here. For example, the weekly commodity trend survey basically is asking when the fast moving average 13 weekly EMA and the slow moving average, the 30 period SMA cross, either bullish or bearish. You want to look at this on a weekly basis. So the chart looks something along those lines. And interesting enough, here's this whole COVID experience. And you can see the actual trend in the market turned down back in February. I think there was somebody in Eastern Europe that went around causing trouble, which I think caused this market to roll over. And so I just basically walked through, like I said, we did all of the currencies, and of course things like the euro just look like an absolute train wreck. There's the breakdown. This system works really, really well if you want to just sort of set yourself up for success. So, as here, the euro is a good example. And I think on the website, our little weekly commodity trend survey, all of the currencies, you can see a bunch of them are sitting neutral. They're not really at the top end of their ranges, so you can't really think about shorting them. They are sort of nearing their bottom end of their ranges, but in essence, a neutral reading is sort of like a big hurry up and do nothing. It is interesting, of course, crypto and the altcoins. The altcoins, they're extremely volatile. So they've all screamed down to the bottom end of their ranges, but we're just waiting for moving average crosses. So these guys haven't even done that. They're just sort of sitting mid-range. Probably like you look at that euro, right? If we look at it over a longer period of time. What I ideally like to see to hunt to buy would be 52-week range. That'd be like back there. And where's the 50% rule? So actually it'd be interesting. This thing should where are we here? Let's go 50% rule. This thing should start to suggest that there's a bit of room to the upside. We've really come off hard here. Anyway, the point of the matter here is, because this product just got up and running, and Sjord's still sort of trying to work out the bugs, because I don't think he quite understands what it is that I'm doing here. We don't have the moving average crosses reporting just yet, but I think over time this data will fill in. I'm not quite sure how we do this. Maybe we'll pop on over here. I do know that there were, so let's see. And so I don't even know how he's done this. I'll have to look into this over time. Maybe this is this trend matrix. Hey, there we go. Yeah, it's not bad. So you can see we don't have the actual age in the trends reporting yet. I'll be working on that. And you can see that this just so happens to be the bonds. I'm not quite sure how we'd look at the entire thing to see the crossovers and the age in weeks like I have on my 1980s website. But it's still a work in progress. Anyway, where am I going with all this? If you are looking for some content on top of today's sort of basic generic rant, I would like to try and make this weekly commodity trend survey a sort of very regular thing. And I basically, like I said there to start off, we went through the currencies, and I'm including Bitcoin and Ethereum in the currencies. The financials, interest rates, of course, they look like an absolute train wreck. Woohoo! The equity markets, and as we said there a moment ago, they pretty clean signals. And also I did the energy markets. Look at that, crude oil down $4.75. Wow. You can see the trend rolled over there. And I did the metals, and how ironic, eh? And I spent a lot of time blabbing in the video yesterday about how what are you supposed to think if you ever see the market smiling at you? And the interesting thing there is this is a monthly price chart. Boom, boom, boom. Huge monthly M. So sadly for all the gold bugs in the world, man, they're going to have a bit of a tough slog here. I suppose you got to feel bad for them. I'm not quite sure. Do you feel bad for somebody like Peter Schiff? I don't know. Sure, he doesn't feel very badly when crypto falls apart. So. Anyway, I'll leave that up to you. But the long and short of it here is actually, interestingly enough, you guys are anybody who's actually participating in the markets right now. This is a very unique scenario. These kind of scenarios don't happen very often. I think it's all about, to be honest with you, I think it's all about this shmita year. So once every 7 years, the Jewish I don't know, what do you even call it, but anyway, their sort of cultural rules say that that they're supposed to forgive debts or something along those lines in the shmita year. And actually Monday, ironically enough, is the settling up date. So with that in mind, I think a lot of people are actually looking for some pretty bumpy price action into Monday. And I got to say, it could be a pretty wild week here. We're not really, it's still 11 o'clock here on Sunday. So we're not really seeing the markets acting the way they would probably tonight or tomorrow, because we're still technically in the weekend. But wow, I'll tell you, there's a lot of position squaring going on. So if you want some commentary on the currencies, the financials, the equity markets, the energy, the metals, I just went boom, 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 one after the other. Please go check this video out after I'm done. So, and actually I did this even as a live stream. I'd like to try and do the live stream sort of, maybe even a bit of an alternative to YouTube, just so we have it in our back pockets. Just have, it's always good to, never paint yourself into a corner with one platform, like YouTube. You can see how arrogant they're getting. So I don't really like to be at this sort of mercy of one particular company. Anyway, there's sort of an intro. As I said, just got back from our Portugal trip. I don't really have too many pictures per se to show you. I suppose probably the best picture would just be simply something like, you can see I already did it. Cow gift. Probably if there was going to be a word for our Portugal adventure, it is a vaca. So I suppose once we get settled in over the coming few days, we'll show you lots of pictures and jokes about vacas. That was a sort of a running tagline to a joke that we had through the whole Portuguese trip. And I got to tell you, if it wasn't for the fact that Liam was here, and actually I'll finish this video off and then head off and be with him this afternoon. There's not a hell of a lot of reason to come back to Vancouver. Sure would have been nice just to go and buy that place in Porto and be done with it. Start moving in. In fact, I'm so disillusioned with the West right now. My shoulder's been killing me. I stubbed my toe in Britain on the way back, and my whole foot is now black and blue all the way along the sides of my foot. So clearly these vaccines have done something to my metabolism, the way my body is functioning. And frankly speaking, it scares the hell out of me. I got to get into a doctor or something tomorrow, because it's shocking what's going on. And now, unfortunately, because of these damn vaccines, I certainly don't want this to be a political call, but I think basically these companies now set me up where I could very easily die. If I get a wound or something like that, it's an open wound, or if these, I get a funny feeling there's a blood clot caught up there in my shoulder, and that's why it's not healing and it hurts so much. I feel very disillusioned. Big Brother basically screwed me over. I don't know, we'll see what happens. I'll try and go and see a doctor tomorrow, but hell, that in itself is a bit of a challenge in this silly country that I'm living in right now. As for the market itself, like I said, I went through all the various different markets in that weekly commodity trend survey video that I did yesterday. Actually, the only markets I didn't cover were the commodities themselves, and I guess I'll do a follow-up video on those maybe next week. But you know, there is your stock market image. We on the website. We had one gentleman who, let's see, where can I show you this? Who put together a nice little blog for TRI back in the early new year. And I have to say, this blog is so pretty, reads so well. And I was even tweeting out that, frankly speaking, I mean, you get this for free. There's Wall Street firms that don't do this much research. And this absolutely had the market tapped. We basically had a roadmap for what to expect in the market. I don't even know what I'm showing on the screen. Where can I see what actually is it's on this? I don't know how this works. Maybe on the YouTube page. Let's go over there. If I do that though, I think that screws up the video thing. I tell you, I'm not overly impressed with technology. I've said this before, and this is probably ranting and bullshit. Nobody really wants to hear it. Doesn't seem to make my life difficult. It seems to make my life a little more difficult. Okay, so I'll put that over there. So on the camera thing that's still showing. And let's go. I think I go here. All right, I think that's it. Yeah, there's a stream. I think that's what I want there. And there's 35 people out there in YouTube land. Hey, there it is. All right, so at least now I can see what the hell you guys are seeing. Let's see, is there any way, because I don't want to minimize this .ninja page or whatever, because then the video disappears. Go over here, something like that. Okay, TBG crypto, hello, Portugal, yeah. Yeah, wasn't it great? I hope you guys had really enjoyed meeting Stuart. That was so great. And actually, we have to say Stuart without a T, so Stuart. Anyway, it was fantastic seeing Stuart there and Oliveria de Hospital. I haven't seen Adam C since I've been back. I don't know whether you're around, Adam, but I'll tell you, he booked the Oliveria de Hospital house, and I got to say, I think that was the absolute best place. So thank you, Adam. As soon as we got to the third house, Adam had a shitty bedroom, and he's like, you know what? I've had enough of this nonsense. The trip peaked at Oliveria. I'm out of here. Anyway, so Adam, I hope you're doing well in the world. If anybody does see Adam, say hello to him for me. I'm a little worried about how all that went, but anyway. So there's Stuart. Stuart, it was Stuart. It was Stuart without the T. Stuart. It's great seeing TBG Crypto. TGB Crypto was, I think he was the star of the day with his little pinky ring watches. Now I've got one. Let's see who else is over there on the page. And actually, it's kind of nice to interact with you guys. Let's go rant. Well, let's hope I don't rant as much as I. But I tell you, man, I'm already starting off. And I'm feeling a little stressed about what these vaccines have done to my body. Scary. Oh, goodness. Can't win. Anyway, I don't know whether the video is actually working or not. So this is so messy. All right. So I suppose since this is the weekend show, you know, we're supposed to start our level 1 program, and I know we actually had somebody in Portugal who was going to join the education program. Nadia. So I hope you're getting to work. I had made reference earlier that this blog was up and running, and then I had said, oh, look how wonderful it is, free, YouTube. But I do think that this this image is it's pretty solid. This is, whoops, that wasn't what I wanted. There we go. In that I like this thinking that late September, there was a bit of a panic dump, and I think that's basically what happened there. Last week, we should get a little bit of a counter trend rally. And heading out of September and into probably mid-October, the market should firm up a bit. And I'm getting the feeling, as I'd sort of mentioned in this video yesterday, I'm getting the feeling that the big inflation problems in our society, specifically this market, unleaded gasoline, you can see we're actually 45% down from the peak. So it doesn't have an M working yet, so we could very easily ratchet right back up and test those all highs. But it's interesting to see how this is a monthly chart. If we go back to that weekly chart, you can see there's big old M working in that weekly crude oil chart. And you can see they finished this market on its knees on Friday. So ironically enough, if this market is weaker, the whole shmita thing, you could make the argument that the stock market is relatively weak. These are actually inflationary proxies. So if inflation is really high, then you actually should expect the stock market to go ripping higher. That's, that's half the reason, the inflation is runaway. Well, I mean, look at that darn move higher in stock prices. That is one inflationary component. So the fact that they're unwinding this and they're unwinding this, ironically enough, this is I think the theme out of this video yesterday was, Chair Powell, all he wanted was, he just wanted to, when there, shouldn't we debate mortgaging our future and all that bullshit that was back here. All he really wanted was the stock market to get back to here. And then unfortunately, this is where the stupid socialists, when, build back better bullshit, and fucking the worst part about it is Granny was the one who was pushing this really hard. When, Granny, you stupid idiot, all that extra, spending by the US government, and then unfortunately you got idiots in my country who just, there is no tax revenue. There never will be any tax revenue because frankly, Canada gets most of its government revenue from oil royalties. And you saw with the oil market, if the oil market is rolling over, then that means that the royalty payments to the government of Canada for all the oil production, that's going to be rolling over. And you can see it in the currency. I mean, you tell me, does that Canadian dollar look like a buy or a sell? I mean, there could be some contrarians that say, when the market is going parabolic like this, you probably should be looking for a bottom. But the trend here is clearly down. And I've said this repeatedly that sadly, I actually think Canada is a short for like literally the next 15, 20 years. And of course, our socialist leader just even recently, the doofus comes out and says, oh, we're going to print $4.5 billion out of thin air because there ain't no tax revenues that are supporting any of that shit. And just blow up the government budget, blow up the country's balance sheet. And, as I said, you're not going to get rising royalties coming out of the energy market. In fact, I'd say put a fork in that baby. That bull market is done. And this was kind of a weird bull market. Like I said, the Fed comes out, throws bucket loads of money. And I get the impression, it's the same conversation as this. At this point, I think the Fed was like, uh-oh, we've made a really bad mistake here. And then through this part, of course, this is when the inflation number is going absolutely insane. And they're like, oh, we got to do something. And what do? Boom. And actually, interestingly enough, it's the market that's voting here, not the Fed. One thing, actually, when I was going through this video yesterday, I was talking briefly about the Fed spread. I thought that they had gotten control got this thing under control, but you can see over the past 2 weeks, the corporate interest rate market is just absolutely puking out here. So I actually loaded this up today. This is our Fed spread model. I wasn't able to get it looking all pretty for the actual broadcast. So you're just going to have to sort of use your imagination a little bit here. I got the impression, actually, this was that reference, that M right there. This teal line is that Fed spread. And here is the number here, 166. So 1.0 right there, that's supposed to be the magic line that you do not want this spread to go over. And you can see they went over it. Okay. Well, they got the religion. They brought it back under control. Then it went over again. Oh boy, we got trouble. They got it under control. Look at this. Here we go again. They ratcheted it right back up. And, here are your Fed funds. And the question really is this the correct contract? So this 30-day Fed funds weekly in blue, that is the spot market. So there is, I guess, the most recent, 17th, 19th. So I don't think that has the most recent Fed funds print. That's interesting. Maybe this might be inaccurate, but anyway, here is the euro dollar market, and you can see the euro dollar market just continues to puke out here. So I did have some deferred contracts. Like I said, I didn't really have the time to set this chart up correctly. But the simple message is that, like, this teal line, that's the most important thing we want to pay attention to. And that teal line is still going higher. Now we're back into the area. You might even have to see that the Fed has to actually do an emergency rate increase just to catch up to the euro dollar market. So euro dollar market usually leads the Fed funds. The Fed doesn't really want to raise rates. They will raise rates if they have the opportunity, but they generally don't want to, because usually that brings the market to a grinding halt. But here is basically the past 40 years of short-term interest rate policy, and you can see there is the absolute catastrophe that we're living in right now. So I did actually sort of an average study of what rates are going to do over the past over the past 40 years, typical rate increases, and just doing an average. That's what this is. What should we expect an average move? That's what this study was right there. And you can see, woohoo, we've blown right through there. So this is an abnormally large move higher in short-term interest rates. And the worst part about this, of course, is that the cycle, we can see this moves on a very predictable sine wave cycle. And the sort of the ultimate high in interest rates, the low in prices, doesn't come till basically about, well, I guess about 11 months from now. So I don't know what the hell this is going to look like, but oh boy, this isn't looking good. And one thing that sort of reiterates this kind of thinking, and it's a little bit scary, is when I was in the UK, I suppose we could do this for the US. So funny that Biden guy's like, no, we don't have inflation. I did this while I was with the mayor of Nottingham. It was kind of fun. Did the whole touristy thing for the UK over the weekend. But check this out. So we were looking at this chart. This is a year-over-year inflation rate for the United Kingdom. And if you're a fan of things like extensions, this is clearly a massive historical range breakout. So we can do things like extension studies, which means that we can think things like parking garages. So the cool part about it is if you take our education program, all this stuff that we teach you about trading, stocks, bonds, commodities, hell, you can apply it to economic data. It's the same logic. There's your parking garage. And then what's super cool, I don't really have it in the education program yet because I don't fancy myself really an expert in it yet. I've just been starting to use it over the past few years. But if we start doing things like chaos theory off of this, there's 2.618, which was basically a test of the old highs, and we just went blowing right through that. But notice this 4.669, basically Feigenbaum's bifurcation chaos level. That is the number that he really loves. Notice that lines up so nicely with 1.618, which is like the golden ratio. So look at that. God, inflation is expected to top out at about 14%. Ugh. So there's your backdrop. So why does the short-term interest rate market look like this? And it just keeps puking out higher and higher and higher and higher. Interest rates going higher and higher, bond prices going lower and lower and lower. Well, I hate to say it, has everything to do with this, right? This inflation. And, you know, it's interesting, and I made reference in this video yesterday. Mr. Druckenmiller, who I would, if I was going to have a sort of a superhero to follow, I like him. He basically said that he didn't expect this interest rate market to finish. You know, like I said, we still got a long way to go on this. And he said he doesn't expect this them to get in front of this until they actually take the short-term interest rates above that inflation rate. So what the hell? We're gonna have double-digit inflation now? Woo, party. Did the YouTube page crash, Chris? Are you still with me? Oh, there it is. Looks like it's still working. I don't know whether it is or not. Let's see. Am I just talking to myself? All right, cool. Thanks, man. Vaca. So actually, Chris represented well in Portugal. I think people were very impressed with Chris. So, in fact, if I'm not mistaken, I think our Italian stallion and the what do we call you? The Philadelphia Nightmare? No, you're not from Philly. You're in New Jersey Nightmare. New Jersey Nightmare. Anyway, I think they're both going to. Chris is the ish. TGB crypto. Now, where the hell's Eddie? Oh God, it was great hanging out with all you guys. TGB crypto, and actually, I was really impressed. Let's see. I think Josh even did it. Let's see. Whole cavalcade of characters. Here we go. Look at all these cool people. So there's Adam C. Like I said, he booked the Oliveria house. I hope Adam's there. There's Eddie bragging about his girth as usual. Let's see. There's our Italian stallion. Chris, we didn't get an interview with you. There's TGB Crypto. Anyway, so if I'm not mistaken, the Italian stallion and the New Jersey Nightmare are going to maybe potentially be roommates in Lisbon while we're still looking for our place. I don't know. Actually, from what I understand also too, the New Jersey Nightmare. Now we got to think of a better nickname. What do you like to go by? Oh, the Devils! The Devils! You remember that? Anyway, so we'll call Chris our New Jersey Devil. Mind you, better not say that to that French lady, eh? She was a character. She might not like that religious reference. Anyway, back to our story, whatever the hell I was talking about. We probably need to see this number get to the point where it's actually above the inflation rate, and then you know that the Fed's gotten in front of this. So right now, here we are, euro dollar sitting now close to 5% short-term rates. And I wouldn't be surprised if that even has to double from here. And it should basically kick the shit out of the world economy. I often conjectured, why are they building huge skyscraper luxury condominiums in Thailand of all places? And I think that whole world has to end and it all has to unwind. How bad does bad get? If I understand correctly, I think there's even a coup going on in China right now. And we've talked a little bit about this in the past. And I've said repeatedly that I wouldn't be surprised if China implodes here. And all of that hot money that was going into countries like Thailand, kind of just such brutal corruption. The money comes into China and then it gets like laundered out of the country into like, Vancouver real estate. Just $2 million for a single bedroom home you wouldn't even want your mother to live in. I mean, what shocks me is how the democratically elected politicians, as long as it's working in their favor, and these local politicians, of course, they have government revenues based on taxes. So if property values are going up, then that means tax revenues are going up. So they absolutely love this shit. They're just as bad. They are just as corrupt as the guys stealing the money in China, and they all sort of enable each other. And now when the whole damn house of cards collapses, they won't be found. You'll see that they'll be almost impossible to find. Which is so disappointing. It just goes to show these humans, this species is rather pathetic. They don't look out for each other. They don't have each other's best interests in mind. It's all about me, 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 gimme, 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 gimme. And I just see it over and over and over. It just doesn't end. It's so sad the way we're so fucking greedy. Oh well. So point here is, I think that we have pretty good roadmap of what to expect. And unfortunately, in this election year, you can see, Democrat midterm, blah, blah, blah. This dotted line actually goes to new lows into the end of October, beginning of December, November, into that US election. The one interesting thing about this is Mr. Williams, he was suggesting that should the Fed actually be able to get in front of this inflation problem, you actually might see a very substantial stock market rally. But the irony of all that is that that is going to be inflationary. So in a weird sort of way, I just don't know whether you're going to get that really big pop in stocks on the other side of this election event. You can see how, according to this study, market does rally on the other side of the election event, but it's not nearly as juicy as this big honking rally here. It's a little bit muted, and we don't go up and make new highs. Then, unfortunately, I think for 2023, we're just gonna, I think this is a bit aggressive. I think maybe we rally up, maybe test the old highs. I don't know. We'll see. Then in 2023, we roll back over and test the lows in earnest again. So we'll see how it goes. Only time will tell. But I think, I just have to say that I think that this has been a fantastic roadmap for us. One thing that I did notice, which does support the idea of a pretty nice rally into the end of the year, is if we go look at our breadth indicators. I was talking about this recently with you guys. I don't know whether anybody picked up on it. But if we take our little breadth indicator to the very last date, 23rd, notice that the country funds here are minus 80 in the short term and minus 100 in the medium term. So in essence, the stock market is washed out. Now, I could very easily see like one more dump kind of idea. And probably a similar analogy would be like things like, remember, Mr. Nancy. I don't know if you guys remember Mr. Nancy. And I think actually, well, it'd be interesting to see if Pelosi's thinking about retiring this November if the Democrats lose. That wouldn't surprise me. She wants to be like ambassador to some country or something. Total political patronage. But you remember Mr. Nancy came in and made an official, this is the bottom, right there on this one. And I remember it was on the 24th of May, right in there. But notice that actually the market, the market actually went up and then it actually made a new low. Then it sort of went up and then it had its rally. So I could very easily see this kind of scenario here as well. The breadth indicator is clearly saying, whoops, it's clearly saying that the world equity markets are oversold, no doubt about it. Is this a good place to come in and aggressively short? I don't know. That seems awfully dangerous. That's not my style. And if you look at the S&P 500, your time to short was up here. And then as we're working our way down, we actually got a quick little bullish signal there at the end of August. Been kind of waffling around here. Ironically enough, the indicator itself, like the fast being above the slow, this is actually still in a bullish setup mode. So, if we go and look at something like the ES, if we think about the fact that the country funds are getting washed out, then we go back to our sort of grand prognostication. We're here, but maybe we have one more dump here to just break some hearts. That's how I come up with this inverted head and shoulders kind of thinking. So, I mean, you could go short here. Is there a ton of profits to be made? I think you're coming awfully late to the party. So that's how I've been looking at the market right now. And also too, this Monday, tomorrow, is this shmita. And actually there was a really good presentation by Cole. And I don't even know if I'm even spelling it right. Oh, excuse me. But what I noticed, and I don't know whether he had a really cool chart that he got from a certain website. Look, I gotta do this. Yeah, excuse me, all sorts of weird stuff that comes up here. Not very well researched here, everybody, so please don't hold it against me. But you can see, I think this is our shmitas. So what I guess I'm kind of thinking is that the market dumps into that event, I mean, this isn't really the best example, but dumps into that event. Now this one, actually, I could see that our current stock market could look something along these lines, where we dump into that event, and then there's one more probe just before that election on a whole bunch of fear in the marketplace like that, and then your sort of year-end dead cat bounce rally. Now, keep in mind, this is old, so I really actually couldn't find anything that was even really up to date. But I'm wondering whether this shmita event is going to mark some sort of basically like panic dump low. If we look at things like relative strength index, you can see that's sitting right now at, where are we here? 32, up 29, 29.79. So technically, ironically enough, no pun intended, this is actually entering oversold. Readings below 30 are technically oversold on a out of the box RSI, which this 14 period is. If we look at Willie, and this is actually the reason why I built this indicator. Does it not make sense that according to this indicator, I should be, sadly, of course, and I mentioned this just a few minutes ago, that's where you should have been selling if you wanted to be a seller, with Willie nice and stupidly overbought. Now Willie's actually stupidly oversold. So as a broker, my phone's ringing off the hook. Willie's calling up. I want to sell everything, Brian. Get me out. And I'm going, Willie, I hope you realize you are officially stupid. The funny thing is, nothing ever changed. 2 or 3 weeks go by and this silly thing will start moving its way back up, and he'll call me up and go, oh, I guess you were right, Brian. So can I please keep my account with you? No, get out of here, you bastard. You wasted my time. So how ironic, the end results of that relationship is now I have a funny little anecdote to teach all you guys how to avoid. I could actually see this. Actually, this is almost perfect, right? Because remember, said this was the Mr. Nancy buy right in there on the Microsoft and Apple, right in there. But notice how, yes, there was a nice little short-term pop, and I wouldn't be surprised if we get that, folks. Like we said, this little predictor chart here, I think we're the end of September right here. And notice for the next probably 2 or 3 weeks, I think maybe even more than that, 3 or 4 weeks, we actually move up here. So I wouldn't be surprised if we actually move up here. Willie's nice and stupid. But notice, where was that? There it is, May there. Notice there was one, after this sort of dead cat bounce and we exhaust ourselves, there's one more push to new lows. And I think that corresponds nicely with this push to new lows in November right here. Just seems absolutely textbook. And of course, the sentiment out there in the world's not very happy right now. Vladdy is still being a pain in the ass to everybody. And as I was sort of talking about yesterday in this video, I think half of his gambit is he wants to push all this into the winter, then see if he can get Germany to balk as they're freezing their asses off. So anyway, we'll see how it goes. I'm not quite sure where to take the conversation next. We do have a new school term starting. If anything, I strongly suggest to people that we take the time now to get your education and stuff out of the way. Is that weird? The little camera went blurry there. Hopefully you can still see me. So if you don't understand things like trading plans and that kind of stuff, just take the time now and get it done. And that way, I know it's probably very hard for you to understand, but this is our future. We got to get through this sickness crap. We have to get through this, what do you say, the inflation sort of talk. As I've told you repeatedly, I don't think that the inflation talk is really anything to do with inflation. It's more to do with they have to reset the system. Actually, I could probably even move this a little bit forward now. And get ready for the next debt bubble. If you understand the reference to the Rothschilds, doesn't really matter who's in control politically. It could be the right wing, could be the left wing. As long as the banksters control the money supply, they basically are driving the bus. It's interesting. Maybe we are still back here. Maybe we're like right there right now. So it's interesting over on YouTube, somebody says, why would you act naive to blame it on Putin? Well, what I would just simply say is if I was a Russian mother of a 20-year-old, I have a 22-year-old son. So if this was Russian, sadly, Liam will never serve in the military. But if Liam was a quote unquote normie, I would be scared shitless in Russia about my son being conscripted and sent off to a battlefield to die somewhere. A very cold, lonely, brutal death. All at the hands of one gentleman. So make no mistake about it, Mr. Putin has blood all over not only his hands, his face, his body, his dick, his ass, his feet. He's responsible for all this murder. So that's the way I look at it. Is this whole context within the broader framework of a much larger geopolitical battle? Yep, absolutely. We used to have a gentleman on the site, Shane, who used to always talk about how this cycle is all about the consolidation of power. And I believe that the banksters are basically consolidating their power base. The economy has nothing to do with Putin. Oh, I couldn't disagree more with you on that one. So, you can either be part of the problem or you can be part of the solution. And the scary part about all of this is, what is Mr. Putin's role? Because keep in mind, he was a fanboy of Klaus and all that bullshit, right, in the Great Reset. So ironically enough, I might even actually make the argument that he's actually doing exactly what Klaus wants. So the thing that bothers me, though, is that there are human beings who are losing their lives over this. That should never happen. And that's just a sad commentary on this species. Actually, and it's interesting because, this is more philosophical crap. If the banksters actually get away with what they want, then this is what should happen this next cycle. So I think that this is exactly what the banksters want to have happen, what's going on here right now. And what's fascinating about this is actually, if you go back and you look at 1942, and you look at the inflation rates through 1942, they were double digit as well. So it's remarkable. I think that this basically history is just repeating itself. And they always say, if you don't learn from history, you're doomed to repeat it. And I don't think that the public even understands, just does not understand this whole sort of, the money masters. And, if you're watching this video for the first time, I would strongly suggest that you watch this video. And actually, he has a follow-up video to this, which is called The Yellow Brick Road. And I don't know, I'll put it in the YouTube chat window there. I don't know whether that'll be put in the comments. Maybe, just as always, Chris, maybe you can fire it into the comments. But if you really want to get educated on how this world works, and the sad part about it is the public doesn't even want to get educated. So as a result, we're basically slaves to these people, the money masters. And I might argue that Mr. Putin actually is playing a role in this the Great Reset, all that bullshit. And ironically enough, probably we won't find out, and humans won't find out the degree to what the hell the big scam is that's screwing the public over until probably 100 years from now. All the truth will be revealed. All that. So if you really want to understand how this world works, I would strongly suggest you watch that video. In fact, probably, I was even saying this earlier. We had one lady, really, really nice lady, join us on the Portugal tour. And she decided she did want to go down the rabbit hole. And she joined the level 1 program. So now her job in sort of this strategic vision, what the hell is going on in the world, is she has to start understanding this stuff. And it's not fun. It's rather depressing. But as long as you understand what the rules of the game are, then at least you set yourself up to participate correctly. And as I said, the kick in the pants is that this is the last thing, I know all of you, this is the last thing in the world you're all expecting. And yet that's exactly what I think is going to happen here going forward. And interestingly enough, if we look at it, incorporating crypto, there is the crypto cycles. This is, again, the level 1ers as they're going through the course material. This is Brian's sort of great fear and greed index analysis of our economies. And you can see, what does greed cycle look like? What does fear cycle look like? Greed, fear. So, pretty much business as usual. This is a sort of the I guess, well, we'll say this is the post-US Civil War baby boom, but probably more relevant for us. This is the early 21st century. No, 20th century. The greatest generation, George Bush Sr., all the people that fought in the Second World War, Kennedy, all them. And this is the baby boomers cycle in here. So we are now officially into that greed part of the cycle, 17 and a half years of uppy growth. So if we overlay the baby boomers, so the baby boomers are this one. It's kind of hard to see. There we go. And this is the greatest generation, right? George Bush seniors, all those kind of things. I think that's our path going forward here. And interestingly enough, you can see, here is the actual stock movement and price. We can even change it to maybe like a 1 month. You can see a little bit better. And there is what we're doing right now, right? There's our COVID dump. Right? There's the reaction rally. There's the Fed saying, okay, I guess we better get our act together. And what's interesting about this is 22, 23 are, you can see so far 22 has been an absolute train wreck. And really, I don't see any reason why this should change. If we go back to our wonderful blog, and I tell you, man, this is an absolute gift because it's free. So this is the Benner cycle. Basically, he did this back in like 1824. I mean, forever ago. When you want to look for tops, when you want to sort of, relatively good times, when you're in the shit. And ironically enough, if you actually want to make money from investing, if you're finding any value in this, we're an hour in. Can you guys hit the like button and subscribe and ring people's bells and stuff? I'd appreciate it. But when you're in the sea, and the irony of it all, right, is as investors, what we really want to do is we want to buy when others are crying, and we want to sell when others are yelling. So when we see a market like this up top here, we actually want to force ourselves to sell. And when we're in markets down here, we actually want to force ourselves to actually start accumulating, which is very, very difficult for the public to do, right? The public does the exact opposite. So in our level 1 program, we're going to teach you literally how to become an institutional player. Institutions buy down markets and sell up markets. So we're trying to reprogram you. And this is a great visualization of that. And notice, look at what this down year is, 2023. So in a weird sort of way, and it lines up perfectly with the crypto cycle. So if we go back, there is 22-23. Sure enough, it's a crappy time. Once we head out of that 22-23, look at what we've got in front of us. So interesting enough, this is the baby boomer. That was a pretty damn nice rally there, probably 24-25. And look at the greatest generation. Look at their rally through that window. So get ready, folks. I mean, this scenario, I think, is going to play out rather nicely. But we just got to get on the other side of this crazy COVID world. And we got to get on the other side of this crazy inflation world. Now, there are some people that say that the inflation problem is, and that's these people, the money masters people, that say, well, the inflation problem is actually engineered by the central bankers to make sure that they can continue the Fugazi. So, I mean, I'm not going to get into that. And then, of course, you could argue half of that's that conversation about Mr. Putin and what is his role in all of that. What I will say is that it does look to me, Joey Diamond came out there about, I don't know, maybe about 6-8 months ago, and he said an outlandish statement. JP Morgan will be in Hong Kong far longer than the CCP will be in China and Beijing. And he wouldn't have made a statement like that unless he had a pretty good inclination that the CCP is in trouble. And I got a funny feeling they are, because the whole Chinese real estate market, the whole damn thing was just basically a bubble, for lack of a better word. It was all just a big con job. And what's so funny, of course, is that, like I said, local politicians here in Canada, they love the fact that, real estate values kept going higher because all this goddamn fucking, what do you even call it? Money laundering money, China is mafioso. So basically, they come over here and they launder all the profits over here in Vancouver real estate, hide it away. Now that sort of endless stream of buying, it looks like it's coming to an end. And frankly speaking, I don't know how this ends for Canada, but I wouldn't be surprised if there's actually a pretty, I wouldn't be surprised if 23 actually sees like the Canadian real estate market just break violently. And I've been sort of musing, like, why on earth was the Canadian dollars as strong as it was? Because the fundamentals in Canada are an absolute train wreck now for this country. And I think the only reason why this thing was stubbornly staying up here was because the crude oil was, what the hell was going in there. Now that we've got this big old M top there in crude prices, I think Canadian dollar could be in a bit of trouble here. But anyway, we'll see what happens. Only time will tell. So, point of the matter here, I think we're sort of right on schedule here. And what's so cool, if we want to apply crypto to this. So here is that same cycle. Here is the baby boomers. Here is the greatest generation. Here's that 22, 23 Benner cycle trough. And interestingly enough, coming out of that 22, 23 Benner cycle trough, does something happen in Bitcoin right around here? Oh, it turns out there's a happening event. And our rule, of course, is that we want to try and start accumulating Bitcoins about 6 months prior to the next happening event, which I think would probably be somewhere right around this area in here, right? And if we follow along the general path, so teal is 1216, yellow is 1620, and orange here is 2024. If we follow along the path, which it sure looks like we're really doing pretty darn good job, you can see we're coming into some sort of capitulation bottoming event window here. So this has not been updated. This actually was basically the rally off of that 18,000 low. We're now back down at that 18,000 low. Do we have one more final dump down into the final bottom here through November, through that US election window, then the first quarter, second quarter of next year? I think so. It's, it's somewhere in this next year that we find that ultimate low. You can see how the stock market bottoms on both baby boomer cycle and greatest generational cycle. There's our happening event. There's the end of the Benner cycle. There's your next big crypto bull market. And ironically enough, I think it's absolutely perfect. So it really, ironically enough, it just lines up so nicely. So anyway, that's sort of my forecast for going forward here. If we go back to the weekly commodity trend survey perspective and just say, if I was wanting to position myself, what should I be doing? And really, the weekly commodity trend survey just wants to do nothing more than just follow the moving averages. So if we go to a weekly chart, which is what this really wants to be off of, you can see there is the most recent sell signal up top there. That came in back in January of last year. Kaboom! Sorry about that. So January of last year, a little bit of a head fake double bottom, ran into the moving average resistance and then just puked right out. That low right there, key low here in the short term, 18,525. Yep, that looks like the lowest low. So where are we here? 18,085. Uh-oh. Dun, dun, dun. That was interesting. Somebody posted that CME is actually having a Bitcoin and crypto trading competition. So that's kind of interesting. But weekly commodity trend survey, we've been heading down a year now. Man, this has been a pain in the ass, New M's coming in here. I don't really see any reason to, call bottoms here. Looks to me like we're just going to grind our way lower. I'd probably also say, and I've put out lots of charts to this effect recently, so I don't think it should be a surprise to anyone. AB, CD. So harmonically, looks like we're projecting down there about 12,000. And I mentioned this in the in this video that I did yesterday. When I was in Portugal, we had a bunch of people, of course, there, and we did like live shows. And there's one cute girl, our G Zambi, G Band Z, something like that. Anyway, gentleman by the I think his name is Rare. So I don't know whether I'm pronouncing that correct or not. Anyway, he and his wife or girlfriend, they came to the meetup in Portugal. It was great seeing them. Anyway, Z or Zed, I don't know. He does all the he does a lot of the write-ups for the daily brief, so it's super cool. And he says there's quite an audience there in Romania. Anyway, she's always got, I heard her say at least 4 or 5 times, look left, look left, look left, which I thought was so cool. And really, here's a great example. I mean, there was a little bit of a traffic area in here, and that's probably what we're fighting with right now. But really, look left. I think that the key lows are down in here. And you can see that's right up against the POC. That would be a nice little Wyckoff check at that level. But also be a Wyckoff check, I suppose, even at the clotheslines down in that area. So I really like a stab down there. Notice also too that lines up nicely with that ABCD. So I can't really see any reason to fight this. This would be a 50% haircut from where we are right now. The only issue that I would have here is that, you've noticed, and actually probably don't see it too well here. If we go BTC USD, just look at the cash market, you see that in previous year, look at this one. It sold off to like 6,000 low, and then 1, 2, 3, 4, 5, 6 times it came down and tested that level, and then it finally puked out into November, December. And keep in mind, and I remember we said there with that analysis, right? End of October, early November, probably the end of October before the election. That's when I'm looking for that sort of ultimate sort of puke out capitulation low. The sky's falling. Maybe they come out with another, COVID sickness bullshit crap and lock us all in our prison cells. And I wouldn't be surprised if Bitcoin takes a real punch in the nose and crypto takes a punch in the nose through that. So just be forewarned, folks. Anyway, we should see a substantial rally coming up the other side into the end of the year, but this is equity. I'm not even quite sure exactly how crypto is going to act through this. Really simply put, back to our original point, and probably for like most of the public, I'd say like 90% of the public. As long as you see these moving averages pointing down like this, be careful. You don't need to be a hero. Show me higher highs and higher lows. Show me, W's, maybe even bullish momentum divergences. Interesting how we do have a bull div trying to form there. So that's kind of cool. Willie is nice and stupid. I would actually say, we're probably, it looks like the bottom is maybe like, let's call it, $10,000, right? So what this is basically saying is we're $8,000 away from the ultimate low, and we're what is that? $50,000 from the highs? I'd say we're probably a lot closer to the bottom than we are the top. So that's kind of an interesting anecdote. And what I would really say for most public looking at this chart, it's really simple. This market will be a buy when we W on the other side of this trend line. I don't know when that's going to happen. Might even be something like dump, rally back, sideways, and away we go for the new cycle. And this actually makes some sort of head and shoulders. Then we rally up into resistance, fill in that gap. Maybe we rally up, probably up into like sort of the high of value, fill the gap in. Then we come back down, that kind of thing, right? And ironically enough, this would be nothing more than just a replication of the last cycle. Notice, let's see how good my eyeball is. I think we top out there. So let's see where that lines up. Boom. Oh, look at that. 61.8. It's all the way up at 47,000, which is against that high. The only reason why I mention that is the last cycle. And unfortunately, I don't know if you're going to be able to see it here. We'll go BTC USD. This rally peak, this is pretty much what I think is going to happen this go round, same sort of thing. Notice 61.8, doink. Rejection, back down we go. So I would expect that the rally off of the lows, wherever the hell it is, I think it takes us, well, actually, this is that stamp chart. Sorry, just butchering all this now. I think that would take us back up into this 46,000 going down the road. And then ironically enough, it's probably going to be, this is a head and shoulders, right? So we'll go shoulder, head, back to neckline, back to shoulder. Maybe this bumps around for a year or two, and then maybe we head back up, something like that. Wouldn't surprise me. Anyway, pure conjecture. Really no one knows what the hell's going to happen in the future. What I would just simply say is moving averages are still pointing comfortably down. There's no change in that whatsoever. It's almost everybody in the public. This is a weekly price chart. So these kind of W's, they take a while to develop. But I will say the one thing actually looking at this chart that encourages me is the fact that we have these bull divs trying to form down here in momentum. That's a good sign. And also too, Willie's actually officially stupid. I remember when Willie went officially stupid here last cycle peak, there were people that were saying, technical analysis doesn't matter. Just go and buy and you'll make a fortune. We had RSI divs coming in. And interesting enough, that was just a one big ass div. So the fact that we're here now leads me to believe that we're probably something like here. So you notice if we do like a time study and we say, okay, well, maybe we're sort of like here and here, maybe we're even here, but let's be conservative and we'll say we're just here. Well, that means that we should actually start to see a little bit of give and take back and forth, because this was a runaway bull. So this is a runaway bear in about 39 weeks, which makes sense, right? Because basically, if we go 39 weeks, well, that takes us into the summer of 23. And I really like that thinking that, through this period, that's where we carve out our long-term bottom and get ready for the next cycle. So it's not bad. I mean, the hard part about this is it's not a buy yet. The good part about this, though, and if you're like, little old ladies and nanny nibbles, and I just want a dollar cost average, well, there's 78.6. I've told you guys repeatedly that my favorite fib is 78.6. And quite often what I'll see is the market will come down. It drives you crazy. Always in hindsight, of course. But the market will come down and it might even overshoot. I mean, where was that 88.6 again? I could see it overshoot all the way to 88.6, right? Tag the POC. This old, look left. I mean, that makes perfect sense. Our A, B, C, D objective. I mean, all this shit, you can see it. It's coming. But I wouldn't be surprised if we overshoot, hit that 88.6, then rally back. 78.6 actually becomes, notice that was the floor there. So now it becomes resistance. Then we go and we actually W out on 78.6 on the other side. And once we're over here, you look back and go, God damn it W'd off of 78.6 again, the bastards. Like, just stunningly cliche. So I like the idea that, let's get on the other side of this trend line first. Then maybe once we're on the other side of the trend line, and really frankly speaking, I don't really have a problem. Let's back up. That's for timing purchases. But if you're kind of like Brian, I'm really busy in my own career. The whole point of listening to you is I don't want to chase and I don't want to be buying these up markets, because that's where the noobs get absolutely wrecked. Now that we are in reload zones, I don't really have a problem. If you were like an elderly client of mine and I had a fiduciary responsibility to keep you out of trouble, and you said, Brian, I've just been told about this Bitcoin thing. Is it okay to start dollar cost averaging? I'd say as long as we're at or below reload zones, perfectly fine by me. You want to try and time your purchases, we're still a bit early and we do still have some downside objectives to go. But considering that the upside is like $40,000, $50,000, the downside is like $5,000, $10,000, I think we're a hell of a lot closer to the bottom than we are the top. And I think it's going to take, this Benner cycle image is absolutely perfect. Right? Actually, I love this. That right there. This is absolutely perfect. So here we are, we're down in this area. We're going to chomp for the next year. You might find that we actually have some pretty substantial counter trend rallies here. The base is going to look something like this. The halving event's going to come in. And really, ironically enough, if you want to be buyer of Bitcoins, you want to make sure that you are buying right around that halving event, getting ready for the next big bull market. So thank heavens. I mean, I got to tell you, this past year has sucked horse, it's been a pain in the butt to get through. So thank God we're finally getting through it. All right, so that's Bitcoin, then good old Ethereum. And if I understand correctly off the lower time frames, I think Julian's actually shorting this right now. If anything, this is the weekly price chart. Again, if we just apply the really simple principles, you can actually see we started trending lower way back here, weekly commodity trend survey. So this thing's been going on for a long time. Big old bull div on MACD here, confirmed. That's interesting. You can see we got an absolute ramping up of the bear volume. And then all of a sudden, boom, the bears just stopped selling. Bears are coming back, but if this really is a bear, we got to see these volume bars higher than whatever the hell this volume bar is. And frankly speaking, I don't think you're going to see that happen. But anyway, we'll see how it goes. What I could see happen here is price cascades its way lower. We clean out these lows, and it's interesting. Remember that Bitcoin ABCD, it's pointing lower. This guy's pointing lower, and it's interesting how the 4669 Foggenbaum is a little bit lower. And even now, 2.618 off of this small range is even a little bit lower than these lows. So I have a funny feeling that they're going to go after a liquidity pool just below here. I think that they dump the market here, like we said, into that October, November political event. I really don't like the fact that we're getting M's coming in on the momentum indicators here in the short term. But if anything, you know what this kind of looks like to me is a harmonic. And actually it'd be cool to get Steven to chime in on this. Where we go something like boobity boo. No, that's not what I want. Let's get rid of that. I want this. I'm gonna get this. There. To there, to there, to there. And I think actually 1.618 is your target. So 1.618 somewhere in there. And actually I like how that lines up. Also that lines up nicely with 4669s right there, somewhere in that area. Also this profile looks a bit suspicious here. This profile really wants to look like a parabola. So what that probably means is somewhere around there. It'd be interesting to see where the POC ultimately ends up with this value line. But maybe we go something along those lines. It's a tough one. How deep do we have to dive? Obviously, minus $200. That doesn't make any sense. But yeah, it's regular too. Well, maybe we have to go long to understand this a little better. All right, so yeah, that makes a little more sense. So there. Yeah, so I kind of like that. Nice stab down into sort of this 500 area. I don't know whether we go all the way down into this level down there. Be interesting, you know, sometimes the harmonic guys, they look for like 1.272, so that would be in that area. 1.618 is an awful long way down there. But somewhere down in this area, I like that as sort of your final kind of dump low. One thing that's a bit disturbing about this contract, I mentioned it in this video yesterday, is I don't like how they're breaking this contract. If we break these lows, that will be a new contract low for this futures contract, which in itself is a sell signal. So this profile looks a little suspicious. Harmonics, I like to stab down into this area. And I think it's probably going to be like one of these FU tails, you know, like something like this that leaves a tail, or maybe even that one there, or this one here, or that one there. So you get that big tail. If you have your orders working at those levels, great, you look awesome. But I would imagine a lot of people are going to miss that. And then it sort of reverses, kind of like this bar right here. And then we start climbing the wall of worry again. But really simply put, the trend is down. We just had a new M. The new M Foggenbaums paint 800 and change, a wash of these lows. The ABCDs painting 900 and change. I don't see any reason why that can't happen. You could probably also head and shoulders this out, and probably that distance from there to there projected off of there probably also comes up with a target somewhere down in that area. So whether it be Bitcoin or Ethereum, I don't see any change to this story at all. And same thing I said with Bitcoin, boobity boobity boo. So we're going to have to get a W on the other side of this trend line before this thing really becomes a buy. And so what that probably means is this is going to take a while, right? It's probably going to be like there to 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 there. There's your buy signal way over there. So this is just, you know, conjecture. And in 2024, right? I like that idea that 2023 is a mess. 2024 is actually where you get your buy signals. And, you know, that's kind of this kind of thinking, right? So there's March, April 2024. And if I'm not mistaken, I think May 2024. I think that's when the next halvening event is, and away we go. So we're in that consolidation phase. If you can put yourself on a dollar cost averaging plan, just like I said with Bitcoin, this one's a little tougher, right? It's not going to be as easy. And frankly speaking, I think the market still needs to figure out what the hell POS is actually worth. I don't know. I mean, to be perfectly honest with you, if the whole world economy goes in the shitter, are people going to be like really chomping at the bit to go and load up on Mr. Vitalik's supercomputer and shit? I don't think so. I think the market's just going to calm down a bit. So where is key support? I don't mean to be rude, but trend lines are trend lines are trend lines. I wouldn't fight this. I mean, that is the base. And just like here, right? You know, in this bull market, we went zooming up. And the last thing anybody is thinking about, you know, look at this. Oh, it's a new world, new bull market. The last thing in the world anybody is thinking about is, well, this market's probably just going to have to come right back to trend line support, just like that. Let's see if we can crisp this up a little bit. Oh, there we go. I was even being a bit aggressive. Let's make, there's your real trend line, right like there. Boom, boom. All right, so where's trend line support? And sure enough, that was this move. So pretty close. Oh, look at that, son of a bitch. So there's that original trend line. Look what happened there into that COVID dump. Basically kissed that trend line, took off. So could you see? It's interesting how this little trend line we just drew here, it's already being played with right now. So I don't know. I'm just blabbing away here. Yeah, I don't know whether I'd put a lot of faith in that. I mean, it's interesting how we did bounce there, but remember I did those ABCDs. I think what's going to happen here is this trend line's going to, what was support turns into resistance. So there to there, there to there. Oh, interesting. Pretty darn close. Yeah. What you really don't want to see, and I don't like the fact that there's this M right here. What you don't want to see actually is for the market to go and put in structure below that M or below that trend line. So this is still acceptable. If we just simply, you know, like, and I don't know whether I think I did this, but maybe it was on Bitcoin. If this is a harmonic, right, and we go boom, 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 and maybe 127s. Be interesting. We should all collectively bug Stephen and get him to come on the daily brief and show us his harmonics and see if I'm even close. Hopefully, hope this is just like straight down into that harmonic objective. All right, we're feeling fine, and then away we go back to the upside. So that would be kind of cool to see. I don't know. It's gonna be a tough one. You know, moving average relationship bearish. We just failed at moving average levels. So, you know, certainly no buy signals here. And of course, we just had the buy the rumor. Now we have this thing called the merge. And I think you're getting a sell the news here. I would also say, but I might change this to a log chart. Yeah, you can see this is pretty well defined. Head and shoulders. So boom, 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 boom. So there's the head and shoulders, which means, oh my God, this one might be almost done now. There. Yeah, that's not bad. That actually looks like it's finished. So that's good. So maybe this is a nice little harmonic, right? Give us that dump. Also too, and I mentioned this in the video yesterday, with regard to something like an Ethereum, we should be coming into tax loss selling. So there's a, you know, obviously this past year has been an absolute train wreck for any sort of people that have been investing in crypto and all these various tokens and stuff. I don't know if there's any that are even up year to date. So my hunch is that you're probably going to see a bunch of tax loss selling into this year-end event, but that usually opens up a fantastic buying opportunity. So keep your eyes peeled into the end of the year. My hunch is there probably will be some sort of pivot that's put in an Ethereum, and, you know, same sort of thing that I said with Bitcoin. You know, if we're thinking that our short-term bottoms, so maybe even into this node right here, but, you know, let's just sort of ballpark it somewhere around there. You know, where's reload zones off of the lows? That's 3,000, and this will be 700-800. There's going to be some money to be made there, right? That'll be like 5x just on a rally back into resistance. And I think that's going to be the story going forward. Kind of like what I showed you with that Bitcoin and the 61.8 bounce. So you can kind of see, right? Maybe we dump into these lows, put in some sort of bottom here. This thing isn't really technically a buy until we W on the other side of that. I could see a huge counter trend rally up into 61.8s, then a pullback, and then maybe something like that. And that sets up your bottom for the next cycle. So I could see something along those lines. That would not surprise me one bit, you know, something like that. So, if anything, like I said, much better now to see that we're probably closer to the bottom than the top. It's such a pain in the butt to get through these. This time last year when, and, you know, try and remember that Alan reference, you know, when he's on social media and on, you know, well, is Saturday Night Live social media? It could be. You know, just try and remember those kind of references. So it's interesting how we talked about 78.6s as bottoms on Bitcoin. I can see the same thing. In fact, look at this scenario, right? We dump into 88.6, then we rally back, then sort of W out, and notice we're going to look back over time and go, son of a gun, goddamn bottom came in off 78.6. Would not surprise me. I see it so many times in my career. So that's what I think is happening here right now. So anyway, if anything, we probably want to see this come in above the trend line. Something like that would be most desirable. And really, you know, as we go through this transition window, the moving averages will turn back up. and then we can get ready for the next bull. So, but it's nowhere in sight right now. Somebody asked me a moment ago there on the YouTube page to look at link. So there's link and versus. This is the USDT tether. Of course, you know, just as they blew up Mr. Kwan, I don't know, and his whole sort of foray into stable coins. I don't know whether tether is really bulletproof here or not, folks. Interesting how we're trying to put in a base here. So that's encouraging. Moving averages have not turned back up yet. I might argue, you know, I always talk to you guys about weekly W's. So you can kind of see we go down, up, down, up. So I wouldn't fault you if you came in and said, you know, Brian, this thing's just been beaten into the ground. I'm going to go take a shot. I will risk this small range. I'll buy the W and I'll risk to a break to new lows. And I don't know, let's use Collins pump chaser zone. I guess it would be dump chaser zone in this case. And hell, let's even just go off of that November peak from last year. And we'll do things like the dump chaser zone, 38.2 to 50%. So that would be in that area there. Let's see, do I have it the right way? There we go. So on a move just back to test 38.2s, that's going to spit out a 4.4 risk reward ratio. That's pretty damn good. If we get that 50% level move, that's a 6-to-1 risk reward. So how many of these W's do you have to hunt to just be a scratch trader if you can spit out like 6-to-1 win ratios on your trades? That's like 20%? No, less than that. I guess about 18%. So if you have the patience and discipline to pull the trigger there and risk against the lows, I don't really have a problem with that. Is this trending higher? This thing's a bull. This is where our little, you know, can I get a W on the other side of the trend line? Actually, that looks like that came in nicely there. That's not bad. What it probably tells me is that this now is the dominant trend line there to there. So interesting how if we can rally up, we're probably going to bang into some major resistance along this trend line here. Can we get back up to 38.2s? Like I wouldn't be surprised if we kind of go down, just eyeballing this, up, down, and then rally up. The noobs will see this trend line break and they will buy that, but that's a trap. And then the market might even come right back down and walk along this trend line on the downside. I've seen that happen repeatedly. Drives you crazy. So we've got a little bit of an uppie here. The only problem with this kind of scenario, and this is actually what I'm seeing a lot in the space right now, is there's a whole bunch of names that are trying to turn back up here. Uh-oh, did we lose the camera? What happened there? Ooh, the battery just died. So this is what I had to do yesterday. Let's see if I can do this on the fly. Well, somebody asked me to look at links, so I guess I did that, and then maybe we'll just call it a day. Let's see if I can pull this off on the fly. On the whole, let's see if this works. If it doesn't, then we'll have to flip on over to the other camera. So these batteries don't really last that long anymore, eh? Guess you have to. Ooh, that would be a good idea. I wanted one of those. Let's see, is that gonna work? Are you gonna come back? How much power do we have? Oh, looks like we got all bars. So it does charge up relatively quickly. So let's see, does it come back? That, and then it should come back. Hey, yay. Vodka. All right. Vodka. Vodka. So is this market trending higher? Well, the moving averages are saying no. I think off of this huge formation, we're probably just going to rally back into resistance here. But off of this tight little fast little formation, looks like we have a bit of a buy. And I wouldn't have a problem if you're like, Brian, I'm a trader. I'm supposed to take trades. This is what I do for a living. And you pulled the trigger or even waited for maybe this little reversal bar. Like you might have even said, well, Brian, there's a W there. So let's get rid of all this nonsense. There and there. So there's a W, down, up, down, breakout. I'm not going to chase this, but what I am going to do is I'm going to go down to like a daily chart. And then I'm going to draw a reload zone off of this entire range. Like there. And I'm going to see if I can sneak my way in and take a shot down here. Look at that 78.6 level. Oh my goodness. I don't know whether I would even be remotely sharp enough to be able to hit that. But what I really like to do if I see these breakouts and then big run-ups is I'll just throw stink bids against that candle body low, that candle body low, and these candle body lows sort of right down in this area. And you notice ding, 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 ding. And if you bid 78.6, you look like a total boss. But I got a fill there. I do see an inverted head and shoulders here, but it wouldn't have given you a very good entry price. I don't like the idea of buying way up there because that's like basically the 50% rule. But that is a nice inverted head and shoulders breakout there. And then, right after the inverted head and shoulders, boom, in comes a new M. So you can see there's just a wicked war going on right here, right now in this market. But probably another good example of that conversation that we're, are we actually at the bottom? And I'm going to officially declare this is the lows and we are never going a penny lower. I don't think anybody can make that kind of claim. But I definitely think we're a hell of a lot closer to whatever the bottom is here than we are the top. The only problem with this is that, you might go in there and pay $7, $7.82 for this damn thing. Could it fall 50% from here? Sure. If we change this to like a log chart, then all of a sudden you see that 50% haircuts from this level, right? 782. So that's what, like, let's call it a better part of $4. All that is a move down into there. And crypto is notorious, especially actually not just crypto, but venture capital is notorious for putting in these bottoms that look like they're going to bottom. So you're like, all right, here we go. And then one more fuck you. And then back up and then sideways. And then we go up. And this makes a big head and shoulders pattern. So, are you asking about timing purchases? I go, man, I mean, there it is. You buy your W, you're going to risk to a break of the bottoms. Just understand that that's a very realistic possibility in this market state, especially, that we have a really simple adage, and if you don't know this, write this down. If you could all hit the like button, subscribe, ring Colleen's bell, grab your journals. You should all be journaling feverishly. In fact, actually, there's a couple people that were even saying, Brian, I can't afford the level 1 program. And I'm like, dude, just go over to the YouTube page. I mean, this channel, that we have guys who actually just watch the free videos. And if you are so motivated, you can do it. Anybody can do it. Here is the YouTube page. God, I don't even know how many videos are in here. It must be, this is the Broiler Chicken Show. This is what you're watching right now. How many videos are in here? 250 videos, and you can see an hour, 2 hours, 2 hours, 2 hours, 2 hours, 2 hours. I mean, Jesus, that's like 500, 600 hours of material. And every single show, I'm always saying exactly the same thing. If you haven't heard this before, write it down. So don't make any excuses, all you people in the public. Yes, maybe, and I understand, the world kind of sucks right now. And, maybe you lost your job, or maybe, COVID. I mean, fuck, you still look at my body. And obviously these vaccines have done something to me. Oh God, I might even die out of all this shit. So, I mean, I'm not saying this is easy, and all this whole life that 1% is forcing us to live. Don't get me wrong on that. But there's no reason why you can't learn. No reason at all. I like the education program because, where's the camera? I'm talking to you, damn it. I mean, if you are a self-starter and you know how to teach yourself, and you can get your journal out, and you know how to write notes, and you can teach yourself, just park yourself on the YouTube page. This is the whole reason why I've done all these free videos for years and years and years. I don't want you to feel as though I'm some sort of scammy shill. If you're like the rest of us, and keep in mind, I'm like the rest of us. I'm not one of those smart guys in this world. Trust me, I'm not. I'm just one of the schlubs. And ironically enough, that's half the reason why I built the course the way that I did, is that it is designed to literally walk you through step by step by step and baby steps how to master this stuff. So I think it's good value. I think it gets you headed in the, more importantly in this business, it teaches you how to run a small business of trading, which I don't see anybody talk about online. All I hear is moon boys and use my referral code, and I think this is going to happen, and I think that's going to happen. Nobody teaches you how to run a small business of trading. So, those are the kind of things that really make the TRI experience valuable. But here's a great example where, like I said, I wouldn't be surprised if there is a nasty little treat for people that are sort of bottom calling here, where they might even dump this to new lows. But interestingly enough, if you've been playing this game long enough, you actually know what this pattern is right here. And just as a interesting trivia question, let's do a poll. Do you know what this pattern is called? And then the next question is, what is this pattern historically with regard to bullish or bearish? No, it's not a bull flag. Absolutely not a bull flag. But if anything good, Matthias, at least you're trying. I like to see people try. So you took a chance there. So way to go there. This is called a descending wedge. It's descending, not ascending. Nice try, Emin. A descending wedge. Now the question ultimately is, are descending wedges inherently bullish, or are they inherently bearish? The irony of it all is actually they're inherently bullish. That's a bullish chart pattern, but the problem is they're going to go and break the kids' hearts here as they sort of work through this pattern. Then once they've flushed out all the weak hands, then this thing's going to just launch itself higher. So, the point that I make about this is, if you fancy yourself a trader, then, this is down the roads of Linda Bradford Radke, where you have to actually say, look at, my thesis is that we're closer to the bottom than the top. And I think on balance, that's good thinking. I might get stopped out here. This bottom might not hold, and I might not get my trade off. It might just run up against this trend line, fail, and have to come back down against this and wash these lows. And the thing there is that you have to maintain focus, and you have to, Maybe it's something like 3 or 4 months from now, because we are operating off a daily chart. You might get that breakdown, then you might get another W that comes in here and sets up something like that. And you got to be focused and patient and disciplined to just keep focused. So, with the fact that the fundamental situation out in the world just looks so crappy, our rule in the market is don't fight the Fed. What the fuck? Come on, you piece of crap. And look at this. Why is it showing these ridiculously high numbers here? So now I got to scroll in and fix the darn chart. Anyway, there we go. So you might find that it's going to take a couple shots to try and get in on the right side of this trade. It might take a few attempts. But the good part about it is if you're shooting for things like, this, if we go 38, well, let's do 50%, I suppose, something like that, right? If you're shooting for, and this is realistic, given it's 50% rule, it's not outlandish. If you're shooting for 7-to-1 risk rewards, it might take you a couple shots, maybe boom, you get stopped out here. Maybe boom, you get stopped out here. But don't lose focus. And if you've got these pretty fat risk reward numbers working with, you can actually take a couple shots. And if the market does work its way up to the 50% roll, then fine, you do well. So that's sort of like the bottom callers, right? They're going to be thinking like that. I would just simply say, and a lot of people are like, Brian, I don't want to stress. I don't want to be working stops. I hate getting stopped out. It drives me crazy. Then what I would just simply say is probably your best to wait for these moving average relationships to turn back up. So you can kind of see, if it is the way it is now, and this turns into a huge W down in here, right? And we push up and we break through that level, then the W has now been confirmed. And then really you want to wait for a W on the other side of this trend line. And at that point, these moving averages should cross back bullish. And it's at that point, right? You've got the moving averages crossing bullish. We're still way, way below 52-week ranges. So 50% rules are attractive. And then we start getting bullish structure on the other side of this trend line. That's when this page is actually going to start spitting out buy signals. So I think this is an excellent analogy, right? Our crypto top 30, we have a lot of markets that are all looking exactly like this link. They look identical to this link. They're right down at the bottom end of the range, and we're just simply waiting for these moving averages to turn back up. And that's basically what this image is. So you can see there's 50% rolls, and you probably see link is on here somewhere. There it is, link, and it gets a big fat 5. What does 5 mean? 5 means that we are hunting buys, but we don't have that moving average cross to actually officially announce that this thing is actually bullish. Okay? And that would be these moving averages crossing back up. And the only way they're going to cross back up is if we get the market to plow through that level there. Does that make sense? Whoever asked for the link analysis, does that help you? All right, and we could probably go crypto by crypto by crypto. As I had said there a second ago, we have a lot of names that are sort of hunting buys. They're not buys just yet, but they are getting awfully close. They're down at the bottom end of the range. They basically wiped out the market. And now we're just waiting. Can you please give us a little bit of actual bullish price action to justify us stepping in? There were a couple names recently that actually tried, and unfortunately they failed. And this happens in the markets. There's no guarantee in any of this shit. So you can see this is ETC. This is one of the ones that did actually have the moving averages cross back up. Now, one thing I don't like about this is the moving average cross back up. You can see that the move itself was extremely violent, just straight up. And what I see here, and this is what might happen with your link, is, kind of what we were pointing out. There's a cute little W that comes in while these moving averages are still bearish. There, it produces a hell of a trade here, right? So you're going to buy there. This is just buying the W's, going to risk to new lows. And you got all the way up to like a 4-to-1 risk reward. Woohoo! That's 18 bucks. Brian, if I had bought this W at 18, you should be able to tell me exactly where my order to sell half of this is working. But in essence, somewhere around that $40 level. So I think what happened here is the market, and again, this is also a really good analogy of our LJ setup. So 1, 2, market breaks, W on the other side of trend line, goes zipping straight up, woohoo! But then bangs into another downtrend line, somewhere like that, and then also that. So bang, bang, bang. Hold on. So we had this fast moving average, or trend line break. We also had this sort of medium speed trend line break, but I might argue that we just banged into this trend line resistance. We've been rejected hard off of it. And now the market's sort of sitting there going, well, I'm going to M out. Do I have to come all the way back down against this trend line? And remember, we don't really get a buy signal on this particular trend line until we get a W on the other side of the trend line. So we broke it, went slamming up into this trend line, and now we might just melt our way right back down. A little bit, dangerous. Also, too, another reason why this probably fell out of the buy window, well, even though the moving averages are still pointing positively, I don't really like to consider these things a buy unless they're at or below the 52-week 50% level. So there's the low for the last 52 weeks. The high would be there. So that's September. So 50% level is there. And because this is a rolling 52 weeks, you can see we actually tagged the 50% level there. So in a weird sort of way, I actually think this trade's kind of done. And now, if we're going to go highest high and highest low off of the current 52-week range, there is the low. But now, since we're in September, that means we actually have to go off of, where's September? There's September there. So actually, what's that high? September 6th. Oh, we just lost that. So it's this high right there. So this, it looks to me like actually this trade is done. That was your target. Produced nice little double. You got yourself some free coins. But now this is not looking very compelling. So it's a little bit dangerous now. We have seen a number of altcoins that have sort of shown a bit of strength here recently. And sort of my comment, I think we saw like when on looking at the dashboard, if we go over to, I guess, the breadth. The strongest issues in the altcoin space, you might even argue there is that rally off of the lows that we kind of talked about. Interesting how teal is still pointing down. So as a result, we'd call that a weak buy signal. And I actually like that thinking. So, some of the names that I'm interested in right now, if, we do see further firming up in the marketplace, that algo. Question here is, have we crossed through that, have we started to trend higher here now? I don't think so, not quite yet. And if anything, if I go down to a daily chart, it looks to me like these lows were lower than these lows. Yeah. Oh, well, maybe not. Oh, let's see. Oh, okay, wow, that's an interesting. Actually, this would be an interesting Richard Wyckoff bottom. He likes these. So, here's a good example where I really wouldn't have a problem if you said, "Well, Brian, that sure is a hell of a W in there. I'm going to buy that level." And that's 32. So I'm looking for 60 and change to get off my double. It might be a bit aggressive, but gee whiz, look how far this thing has fallen. So, this is what has me sort of scratching my head in this space right now, is that's not an overly bearish looking chart. And if anything, when I do like simple trend line breakdowns and stuff, our rule is show me a W on the other side of this trend line. So we break out, we come down, there's your W. That's a pretty good looking chart. I will say that it looks to me like 200 SMA is probably going to act as significant resistance. Probably that's 38.2 off of a range like this. Maybe that's even the 50% level. So this is probably a good example like Collins dump chaser zone. So something like that. What time is it? Oh, I got to get going here now. It's backwards. Like that. So, I could very easily see this kind of name work its way up into here. So this is kind of what I'm finding interesting about this is, this is not a market I really want to be too aggressively shorting. I mean, first and foremost, do we want to short the bottom end of a range like that? Shouldn't we be thinking about buying this kind of stuff? I think so. That's a pretty good looking chart, I gotta say. So, and then, if we do things like Foggenbaums, and to answer your question, these are Brian Beamish moving averages. You're not going to see anybody else that uses these. This is the 13 period exponential moving average, the red line. It's my fast moving average. This is a 30 period simple moving average. That's my slow moving average. A lot of people like to use the 50 period EMA. It's similar. And this is the 200 SMA. So these are the moving averages that I use, and they work well for me. But Mateus, what you're going to have to find is that half of my job teaching you the school program is to set the table for you. I will show you all the different tools and how they're used and sort of their appropriate cadence in the trade setup process. But ultimately, at the end of this, what you have to do is you have to figure out what works best for you subconsciously. Some people are very aggressive risk takers. Other people are more conservative. Do you use a moving average system, which is kind of a slower system? It's more conservative. Or do you, kind of like what we were showing you with Link, you're picking bottoms and that ETC before moving averages and trend lines are broken. My job is not to tell you that this is the way that you trade. If anything, anybody that does do that, they're actually doing you a great disservice. My job is to show you, look at over the past 30 years, I've used all of these different indicators and tools. And this is the way that you use them. There is I think, a generally accepted cadence that we need to follow when hunting high probability trade setups: trade location, indicator confirmation, market structure, go. And the trade location, that doesn't say that you need to use fibs. That doesn't say you need to use moving averages. That doesn't say you need to use volume profile. That doesn't mean it says you must use chaos theory. Really, how you come up with trade location, that's your exploration. That's what we have to figure out, what works for you. What's really important is you really need to have those three unrelated reasons. So anybody, half of the problem with YouTube and social media influencers and stuff like that is they're learning about a way to trade, and they get really, really excited. Trust me, everybody goes through this. It's so beautiful watching my business partners as they discover a new way to trade. And all of a sudden they're super jazzed. This is the way to trade. And then 6 months later, they're kind of like, well, I'm on to a new thing now. It's adorable to watch. They're basically going through the process that I try and speed up for you guys. in just showing you how to use all these tools ahead of time. And then you just figure out what works best for you in your particular setup. But most importantly, just think rule number one should be trade location. Rule number two should be indicator confirmation. Rule number three should be price structure. And here, actually, this is a pretty good example. So trade location, the guys that come in and say, technical analysis doesn't matter. Just get in there and buy, and you're guaranteed to make money. Use my referral code. They'll tell you to buy like this, but hindsight being 2020, you can see that wasn't such a good idea. This is a terrible trade location. Yuck. Blech. Right? You have to learn to teach yourself to buy down markets. So ironically enough, now that we are down, and wow, what a down that is, I actually think trade location now is okay to think about buying. And then we can use things like fib studies. Are we at or below reload zones? And this is all sort of the nitty gritty stuff that I like to teach you guys how to build setups. So we got that. How about indicator confirmation? Any signs of bullish divergence? Look at this OBV. Look how price is collapsing here. And yet OBV is actually going up. And it just made new highs. What the hell? What's going on here? If that isn't an indicator confirmation that this thing's a lot stronger than what price is leading you to believe, I don't know what is. Look at this bull div down in here. Willie's stupid. Remember I was talking to you about how I used to have a client who used to always call me up. Look there, Willie's stupid right there, minus 82. Would that have been a good place to be thinking about buying? I actually think yes, not selling, buying. And then finally, and the easiest way for you to think about this is, what letter of the alphabet does this look like? Down, up, down, breakout. That, my friends, is a W. That's the easiest market structure to think about. So, from that perspective, God, there's a lot of this market looks to me to be cheap. The only issue here is, and you can kind of see it here, look how long this took. Does this saucer bottom here not look a heck of a lot like this? And do you notice how they goaded the public into, okay, this is a buy. You see that? And then what do? Bang! Go and break all their hearts one last time. Then the market starts Wing out again. And all of these people are like, fuck that, man. I'm not buying. This is all a scam. And it turns out, of course, that is the trade. And then they do it again, bring the market back down against these lows. Everybody who went through this is like, I'm not touching this. I'm not touching this. Then a W comes in here, and you got to have the balls to step up and buy. But, that's a function of your trading plan. Can you do that? Most people can't. So I wouldn't be surprised if this bottom here looks a heck of a lot like this here, which means if you're going to try and time these markets, you might get stopped out like this. Very doable, very realistic. The interesting thing is if you took this risk right in there, why does it keep changing the color on me? Let's go like that, and go like that, I go like that, I go like that, there. Okay. So if you bought here and risked to here, okay, fine. So you lost that amount of money right there. Yeah. Then you forced yourself to come back in, and ultimately, you never did get stopped out on this. And this trade, maybe you let some go all the way up here. Was it worth it to have the patience and discipline to take this small loss, stay focused, then come in again, and you get this kind of gain on the second trade? Was that worth it? For some people, it's not worth it. The stress is just too much. That's why I like the moving average system, where you can actually see that, well, and actually here it's the same thing. Mind you, that's a daily chart. Let's go back to a weekly. Yeah. So, and this is why I like the weekly commodity trend survey. Then you can see through this, actually, the fast moving average is still lower than the slow moving average. And then all through here, this is where that fast moving average crossed above the slow moving average. So it's at this point that you actually, and keep in mind, this is moving average, a little bit slower, a little bit more conservative. You didn't get sucked into this because we were still a bear, but you step in here and that trade, of course, just one shot straight up. So with that said, are you a gunslinger? Do you want to try and front run this trending signal? I mean, it's there. We got bull divs. We got some nice volume coming in. Looks like, ironically enough, I used to work with this guy, Da Vinci, and he himself, and it's so funny because through that last bull market, he totally abandoned his own trade setup. And I was like, dude, your setup works fine. And it's telling you not to do anything in the marketplace. And that was him coming in and telling people to buy this shit, which was just dumb. Oh, well, I sure hope he's got religion. Anyway, point here is this was his setup, right? We called it the Devo, where you get a W and all of these indicators and a W and OBV. I gotta say, that looks like a half decent buy signal. You know, I mean, that's the irony of it all. So, but it's aggressive, you know, and I can't comment on how aggressive of a trader you are. The only way we figure that out is you got to go through the process of, you know, going through personality tests, right? I'm an ENFJ, which means that I'm like a robot. Robots, that robot thinking works well for me. But that's Brian's personality. That's not your personality. That's why I like the bot setup, right? The bot setup says when I turn myself into a robot, I trade like a machine, you know, and just eyeballing it, you know, a bot setup would probably be something like this range. And I throw on my bot levels. So I go bot setup. So we did 33. Didn't go beyond 66. That's close, but man, we'll say for this just quick demonstration, we didn't go beyond. Then I got one low, two lows, three lows to work with, and there's the bot trade. Notice there's a big fat W. So the bot says, and you know, it's very robotic. That's half the reason why it's called bot, right? Is I'm going to buy that level and I'm going to take profits. I'm going to force myself to take profits at that level. Boom, boom. The trade sets up as a 3-to-1 risk reward. So I'm buying there. I'm risking to a break of all these three lows. And I'm going to force myself to take profits there. 2.78. Should be right around 3. And you can see, I mean, geez, that basically nailed the top of the market. But this is a very robotic setup, right? That's why I call it the bot. It also speaks very well to an ENFJ, which is my personality type. I can't tell what type of personality type you are. I can tell you this kind of bot setup. I have one business partner, Julian. He hates this shit. This is like kryptonite to him. He is, I can't remember what the letters are, but his analogy is he's James Bond, which makes sense. I mean, this bot setup is actually more like Morpheus, and Julian is James Bond. He's not Morpheus, he's Neo, if anything, right? So the point being that this kind of very robotic, slow, methodical approach to trading, waiting for setups to develop, and it takes a lot of patience and discipline to wait for all this to come in, and then taking the trade and living by the trade results, that speaks to me as an individual. It's probably, I mean, I can't say probably. All I can say is you have to take your personality test. You have to go through the strategic planning of our course. You have to sort of figure out who you are and where you're going in life to try and figure out whether a setup like this even speaks to you, and it may not. So, you know, as I said, it'd be interesting to see what Da Vinci's personality type is. But Da Vinci, through his research, he loved this. And I got to say, this setup works like a fucking badass motherfucker. But you have to be patient, and you have to be disciplined, and you have to wait for the W and OBV, and you have to wait for the W and RSI. You have to wait for the W in Willie, or you know, Williams percentage R, whatever momentum oscillator is your choice. And you have to wait for the W in price. I mean, point here is completely different ways to trade. Probably speaks really, really well to personality types. very different approaches. Really, there's no right or wrong way to trade. What the right or wrong way to trade is what works for you as an individual. So anyway, hope you enjoyed that rant. Kind of a fun side talk. So, I see a chart like this. I still think, to be honest with you, that we're going to do something like this. But we're not up here. And, sadly, if we do something like this is a trap. And you'll hear people talk like Bitcoin's going to zero, and all that kind of bullshit through here to get you to panic and dump and walk away on what I would consider half decent levels. So anyway, well, thank you, Mr. TGB. I gotta say, if you, dude, do me a favor and reach out here. I'll even give you the chart. Reach out to Da Vinci and say TGB, TBG, because I know you like him. Or maybe you do, maybe you don't, I don't know. But, here is the, well, here, we'll even do a chart link. Copy link to chart image. And show it to him. Say, hey, Brian's thinking about you. Looks like you got a Davo fire in here. I wish the guy, I every single one of you that takes this education program, I actually consider you people my sort of, I hate to say it, but kind of like my children. And it breaks my heart to hear somebody that I've invested my soul into to try and help learn how to trade, say things like, the way that tip, guy, the German guy, just the overt, brutal shill. That kind of stuff really, really bugs me. Anyway, let's bring Dav back. In fact, we should make it a goal. Let's bring Dav back into the fold. Give him some religion. Okay. It's getting on 1 o'clock. Of course, you all know right after this, you're not this MM. You're a different MM, are you? Okay. So you all know what I do here. It's time to go give Liam an awesome afternoon. So if each and every one of you could karmically give us a nice best wishes for a fun afternoon, I'm going to bid you all a fond adieu. And go and give my son the best car ride he's had for the past month or two. So have yourselves a great day. If you can, I would highly, highly encourage you to take advantage of our education program just to get yourself set up so that you have a good basis for running your small business of trading going forward. I think the price points are very realistic. We got probably another 6-8 months of this shit ahead of us. But once we're through it, then I think we actually set up a nice base for sort of 2024, 2025, 2026 markets. So PMA for the win. Chris, was there anything I should have mentioned that I didn't? I don't know. Okay. Level oneers, I would like for you guys, and actually I kind of forgot about that. And what I usually do on Mondays, if there's anything left over, but would like for you to start filling out this form. And actually, just like vibe wise, interesting that you say that, Richard. I came back yesterday full of piss and vinegar, really wanting to try and help. I put this note out here. It's beautiful to see your responses, but honestly, right? If anything, if you can think of some way where I can help, let me know, because I don't know. I'm a dumb fuck. I mean, I'm just another guy in the market. Yes, obviously I have opinions and I swear a little too much, but if you can think of something, try and keep the insults to a minimum, please. But if you can think of something, that some way that I can make this world a little bit better of a place, let me know. Give me the feedback. How can I help? I think I'm pretty good at what I do. I'm actually super excited to go and make a shitload of money in the marketplace. I'm also really, really excited about our Portugal campus idea. For any of the OGers that are watching that were interested in participating in the Hawaiian project, I think we're actually very close to thinking about maybe even putting in bids, stink bids for a property in Portugal that we saw that I think meets all the criteria. So if you want to participate in that, just let me know. I'll put a nice little note out to all the people that wanted to participate in the Hawaiian project to sort of give you an update on what's happened. Wish me luck with Liam. Wish me luck with continuing to try and make a positive difference in this world. I need all the help I can get, and trying to make a positive, influence in each and every one of your lives. All right, everybody, have yourself a fantastic rest of your day. Thank you, Chris, and of course, anybody else on the team that helped put this all together. PMA for the win. All the best, and the only thing left for Brian to say is bye.